viewers, and welcome to the channel. This week's video we'll be discussing the banks, but heading here is after seeing ANZ and Westpac report strongly this week, are the banks back? I should have actually gone to the charts first, because if we do look at the charts of all four big banks over the last 4 years, you've seen obviously, I think it was 5 years. Seen, pre-COVID, kind of a little bit of a steady decline here, as the low interest rate environment kind of really impacted the net interest margins of the banks. Then obviously COVID came, where the impact on the bad and doubtful debts, and we saw that in provisions provided by the companies, was significant. Additionally, they obviously weren't taking principal and interest repayments from distressed mortgage holders for some time. And at this stage, we're a very clear recovery play as the pandemic, at least in Australia, became more under control. And of course, even once the successful vaccine trials were announced, and it became pretty clear that the worst case provisions that these banks had taken were not going to eventuate. And now, to some degree, we're actually back to new highs, both for CBA and ANZ in particular. Anyway, I think it's worth looking at the most recent interim numbers that they've announced, which kind of demonstrate, how well things are travelling right now. This is Westpac on the left. This number had obviously a significant impairment of $2.2 billion that continued in the second half. All, of course, expected bad debts. And what we've seen here, of course, is them writing back the value of at least some of those debts. Potentially, there could obviously be more to come as well. I haven't got those bad debts on this side as well. But overall, you've seen, cash earnings up by 256%. But obviously, that's those provisions ultimately didn't eventuate, so it's a little bit misleading. But certainly you can see in these numbers how strong things have become again, which have also seen big dividends start to return. In ANZ's case, which actually did pay its dividend, I think both dividends last year, but also had some significant provisions for bad debts. It has had a huge recovery, big dividend again now, which is about $1 grossed up, which assuming they're going to maintain that for the final dividend, will be about $2 per share. On the current market share prices, a near 7% gross dividend yield, certainly, which compares very favourably to the current risk-free rate on deposit. I think these are some of the most important things to look at. This is a slide from ANZ which shows how many new home loan accounts, this is in thousands, they're seeing throughout this kind of stronger bounce back. This is, it should be said, from this is March end, so it's October to March. Still seeing impacts from the pandemic, still seeing quite a few snap lockdowns, but 92,000 new home loan accounts in Australia and 42,000 in New Zealand, and this this compares very favourably to previous first halves. When you obviously think about it, we're seeing an incredibly strong residential market in Australia right now. We still are seeing a lot of apartment constructions, new dwellings being coming onto the market in the future as well. I think one major risk probably remains the lack of international either students or people moving here from abroad. That's going to be a risk. Seeing less investor activity in that. And most of these, I should say, are owner-occupied new loans, but the activity is very, very strong. And in the backdrop, of course, is for the very first time in a very long time, is as economies recover strongly, which they are doing, a possibility of higher interest rates in the near future. Sorry, I shouldn't say near future, but in the future, which 2 years ago was probably not likely on the cards. And that is a major part of all the four banks' business, is their net interest margins, effectively the difference between what they charge interest at and obviously what they borrow at. And the lower interest rates goes, the tighter those margins get. So a higher interest rate environment is going to be a very big positive for them, and I think is probably why you're starting to see, at least in the case of CBA and ANZ, starting to tick above previous COVID highs, pre-COVID highs, and why the outlook probably could even see these stocks reach new all-time highs. So I think they were a clear recovery play for a period, but now simply riding the wave of a strong economy. I think there's clearly value to see in the banks at the moment, and probably for the first time in a while, I'd say you'd be crazy not to have any bank exposure in your portfolio right now. Anyway, that's it for this week's video. Thanks for tuning in. If you like the video, please remember to click like and subscribe, and I'll be back next week with another video.